You know, it wasn't that long ago that just banking online felt revolutionary.
Right.
But now, the whole idea of what money even is changing so fast, right in front of us.
Yeah, it really is.
So today we're taking a deep dive into, well, digital finance,
Okay.
but specifically central bank digital currencies,
CBDCs.
CBDCs, and how they kind of fit in with all the buzz about cryptocurrency.
Exactly. And for this deep dive, we've got a ton of research to pull from.
Oh, yeah. Like what?
Well, we're looking at reports from some pretty major players,
Okay.
like the Bank for International Settlements.
What is it, the central bank for all the central banks or something?
Yeah, that's the one. We've also got BBVA research,
Okay.
the Federal Reserve, the European Central Bank, the Bank of England.
Wow, hitting all the big ones.
We even have some really in-depth working papers from the National Bureau of Economic Research.
So basically, we're trying to get the big picture here.
That's
For everyone listening, we want to boil all this research down to the essentials. Like, what are central banks actually doing with all this digital stuff?
Right.
What's driving them? And most importantly, what could it mean for the future of, our whole financial system? Where does crypto fit in? All that. So where do we even start?
Well, maybe the best place to start is with how many central banks are actually interested in CBDCs. I mean, it's pretty much everyone.
Yeah, that's what's so crazy. The BIS survey from 2022, it said that 93% of central banks were doing something with CBDCs.
Wow.
That's huge, right? And it's way more than just a few years ago. It's not just a fad.
No, it's definitely not. It looks like central banks are realizing that digital currencies are probably going to be a big part of the future. They're not messing around.
Exactly. And it seems like they're starting to get a lot more confident about issuing retail CBDCs, at least, the kind that regular people would use.
Yeah, and the research shows that work on retail CBDCs is actually further along than wholesale CBDCs, the kind that banks use.
Oh, interesting. So regular people might be using digital euros or digital dollars before Wall Street does.
Could be.
That's pretty wild to think about. And the projections are saying that by 2030, we could have 15 retail CBDCs and 9 wholesale CBDCs out in the world.
That's soon.
It really is. Okay, so
Yeah.
what else? What else are the central banks saying?
Well, more than 80% of them told the BIS that they think it's important to have both a retail CBDC and a fast payment system.
So even though we already have things like Venmo and Zelle,
Right.
they think CBDCs could do even more. It's not just about speed.
Exactly. They're thinking about all sorts of features and possibilities. And they're not just working on this alone either.
What do you mean?
More than 90% of them are talking to governments, businesses, and even regular people about how to design these things.
Oh, that's good. It makes sense to get input from everyone who might be using them.
Yeah, but the level of engagement, it actually varies quite a bit. Like, emerging economies do things a little differently than advanced economies.
That makes sense. Their priorities might be different, right?
Exactly. And even the way they approach retail versus wholesale CBDCs can be different.
So what about private companies? Are they involved at all?
Oh, definitely. More and more central banks are thinking about public-private partnerships for retail CBDCs. You can actually see it in one of the BIS graphs.
Oh, interesting. So they're recognizing that private companies have a lot of expertise in things like, I don't know, user interfaces for digital wallets and stuff.
Yeah, exactly. And it's not just the technical side either.
What else?
The legal side is a big deal too. The BIS data shows that more and more central banks either already have the power to issue CBDCs or they're working on changing their laws so they can.
So they're laying the groundwork legally.
Yeah, they have to. Before they can launch anything, they need to make sure it's all above board.
Okay, so they're doing all this work, but what's really pushing them to move so fast? What's the big reason?
Well, the BIS survey asked them that, and about 60% said it was because of crypto. Bitcoin, stable coins, all that.
It's like they're seeing crypto getting popular and they're thinking, uh-oh, we better get in the game too.
Yeah, something like that. It's interesting, though, because the BIS also says that stablecoins and stuff aren't really used for everyday purchases that much, not outside of the crypto world.
Yeah, true. So is it more about what crypto could become or maybe the tech behind it?
You're probably right. They're looking ahead and trying to be ready for whatever happens. Which brings us to why a central bank would even want to issue a CBDC in the first place.
Okay, yeah. What's the point?
Well, one of the biggest reasons is something called monetary sovereignty. It basically means they want to stay in control of their currency and their monetary policy.
Makes sense. They don't want some private company dictating how much a dollar is worth.
Exactly. Another big reason is they want to make payments better, faster, cheaper, more reliable.
Okay, that's always good. Anything else?
Yeah, financial inclusion is a big one.
Oh, right. Making sure everyone has access to financial services.
Yeah, even people who don't have bank accounts or don't trust traditional banks.
So it's all about control, efficiency, and making sure everyone's included.
That actually makes a lot of sense.
It does.
Okay, so you mentioned retail and wholesale CBDCs before. Could you explain a bit more about how you're different?
Sure. Retail CBDCs, those are the ones for everyone, for everyday use. Wholesale CBDCs are just for banks, for big transactions between them. And the research from BBA, it really stresses how different the effects of each type can be.
Oh, how so?
Well, retail CBDCs, because they affect everyone, they have the potential to change a lot more about society, both good and bad.
So if retail CBDCs were to become a thing, how would they actually work? Like, what are some of the possibilities?
Well, there are a few different ways they could set it up. One is called a direct model, where the central bank runs the whole thing. They issue the CBDC, they manage all the accounts, they process all the payments.
Okay, so it's all centralized.
Yeah, exactly. Another way is a hybrid model. It's kind of a two-tier system.
Okay. The central bank still issues the CBDC, but private companies, like banks, would actually handle the day-to-day payments. The central bank would just get periodic updates on who holds what.
Got it. So the central bank is still in control, but they're letting private companies handle some of the work.
Right. And then there's the intermediated model, where it's mostly private companies running things. They have a wholesale ledger that they manage,
Okay.
but the central bank keeps a close eye on them to make sure everything adds up. So each model has its own trade-offs, in terms of efficiency, who takes on the risk, and how much power the private sector has.
Makes sense. And I bet there are tons of other decisions they have to make, too.
Oh, yeah, tons. One source called it a Gordian knot. That's how complicated it is.
Wow.
They have to figure out who owns the CBDC, how it's actually represented digitally, who gets to use it, how it's governed.
Okay, yeah, that's a lot. And what about privacy? That's a big one, right?
Huge. People want to keep their financial info private, but the authorities also need to be able to track illegal activity. So it's a tough balancing act.
Yeah, how do you make it private enough for regular people, but still transparent enough to catch the bad guys?
Exactly. And then there's cybersecurity.
Oh, right, of course.
With so many people using a retail CBDC, it would be a huge target for hackers. The attack surface would be massive.
Makes sense. It's a lot different than just banks using a wholesale CBDC. So what about some of the more futuristic stuff they're talking about, like programmable CBDCs?
Yeah, that's definitely something you're looking into. Imagine being able to program specific conditions or rules right into the digital money itself.
Oh, wow. That's pretty out there.
It is. But there are a lot of questions, like how secure would that be? And does it even make sense to have programmable money? Does it change what money fundamentally is?
Yeah, that's a good point. So beyond all the technical stuff, at the end of the day, for this to work, it has to be easy for people to actually use it, right?
Absolutely.
Yeah.
It has to fit in with how people already use money, like with their bank accounts and everything.
Yeah.
They need to be able to move money in and out of CBDC easily, maybe even automatically.
Okay, so we've talked about what's happening within countries. What about international payments? Could CBDCs change those?
Oh, absolutely. Right now, sending money across borders is often really slow, expensive, and confusing. It's mostly because of the way banks work together, this thing called the correspondent banking system.
Oh, right. Okay.
But wholesale CBDCs could make international payments much smoother and cheaper.
Are central banks working together on that?
Yeah, more and more. They're talking to each other, trying to figure out how to make cross-border payments with CBDCs safer and more efficient.
So what are some of the ideas they're considering?
Well, there are a few different models. One is to have a single platform that all the central banks can use to issue and manage their CBDCs. Another is to have separate systems that can talk to each other, kind of like interoperable platforms. And then there's the idea of linking existing payment systems together, like building bridges between them.
I can only imagine how complicated it is to get everyone to agree on something like that.
It's a challenge for sure. And there are a lot of questions about who would control these systems and who would have access to them. There's this diagram in one of the reports, Model 3A, that shows what a shared platform for wholesale CBDCs could look like.
Interesting. So what about the legal stuff? Like if I send CBDC to someone in another country whose laws apply?
That's a crucial question. They have to work out agreements between countries to decide which legal system is in charge. And it's all part of a bigger effort, actually.
Oh, yeah.
The G20, the group of the 20 biggest economies, they've got a whole plan for improving cross-border payments. And one part of it, Building Block 19, is all about figuring out the international side of CBDCs.
So it's a global thing. It makes sense. We're all connected these days.
We are. And when they're thinking about access and how these systems would work together, there are a few options.
Okay, like what?
Well, they could have different CBDCs that all follow the same technical standards, so they're compatible. Or they could have systems that can directly exchange value with each other, interoperable systems. Or they could just link separate systems together.
Each with its own pros and cons, I'm sure.
Definitely. And then there's the question of who gets to use these systems. Like, what about companies that aren't banks or people who live in one country but want to use another country's CBDC?
Yeah, that's tricky.
It is. For wholesale CBDCs, they might let foreign payment companies use the system. For retail CBDCs, if they let non-residents use them at all, they might have limits, like how much they can send or fees they have to pay.
And I bet all the rules about preventing money laundering and terrorism financing get even more complicated with cross-border payments.
Oh yeah, for sure. They have to be really careful about who's using the system, making sure everyone's following the rules, especially when you have people in different countries with different laws.
Sounds like a headache. So have they actually tested any of this cross-border stuff yet?
They've done some experiments, but mostly with wholesale CBDCs. The research says they need to do more with retail CBDCs, especially for people who are sending money to and from places where it's really difficult and expensive right now.
Okay, so zooming out a bit. What would it mean for the economy if CBDCs did become the norm?
That's a big question. There are a lot of potential implications, and economists are still trying to figure it all out.
Okay, well, what are they worried about?
One big concern is that if CBDCs pay interest, people might move their money out of banks and into CBDCs instead.
Oh, why?
Well, because they might get a better return with the CBDC. And if that happens, it could make it harder for banks to lend money, which could hurt the economy.
So it could shake up the whole banking system.
It could. But how much of an effect it has depends on how they design the CBDC. Like, if they put limits on how much CBDC you can hold, or if they don't pay interest on it, that could make a difference.
So they have some control over how it all plays out.
Yeah, they do. But there could be some good things too, right? Like we talked about financial inclusion.
Right, yeah. Could CBDCs make that better?
They could. If they're cheap or free to use, it would make it easier for people who don't have bank accounts to participate in the economy.
That's great. What about financial stability in general? Would CBDCs make things more stable or less stable?
Well, that's kind of a debate right now.
Mm-hmm.
Some experts think CBDCs could actually make things more stable because people wouldn't need to rely on risky private currencies as much.
Okay.
But others are worried that it could lead to bank runs. Like, if everyone freaks out about the economy, they could all rush to pull their money out of banks and put it into CBDCs because they see it as safer.
Right, because it's backed by the government.
Exactly. So the effect on stability really depends on a lot of factors, including how the CBDC is designed.
So they have to be really careful about that.
Yeah. And another thing to think about is that CBDCs could give central banks a much clearer picture of what's happening in the economy.
How so?
Because they would have real-time data on all the transactions happening with the CBDC. That could help them make better decisions about monetary policy.
Oh, interesting. Speaking of monetary policy, how would the CBDCs affect that?
Well, if they pay interest, it could make monetary policy more effective. Like, if the central bank changes interest rates, the effects would be felt more quickly by people who are holding CBDCs.
Okay, that makes sense.
But there could be other effects too, so it's still a bit of a mystery how it would all play out. And then there are international effects to think about.
Like what?
Well, if people can easily trade CBDCs across borders, it could create new opportunities for arbitrage. That's where people take advantage of price differences between different markets. So it could link interest rates and exchange rates between countries in ways that we haven't seen before.
That sounds complicated.
It is. And it brings us to another big question. How do CBDCs fit in with cryptocurrencies and stablecoins? Are they friends or enemies?
Right, yeah. They're all digital currencies, but they're pretty different.
They are, and it seems like the rise of crypto is one of the main things that's pushing central banks to develop CBDCs.
Like they're trying to keep up.
Yeah, maybe. And they're also looking at the technology behind crypto, things like blockchain.
Right, because blockchain could make their own systems better, right?
Exactly. It could make payments faster, cheaper, and more secure. But some people worry that if governments start issuing their own digital currencies, it could actually hurt the crypto world. Well, a lot of the original idea behind crypto was to create a more decentralized financial system, one that wasn't controlled by governments or big banks.
Right.
But if CBDCs become mandatory, it could go against that whole idea. There's this NBER paper that talks about this tension between CBDCs and the original vision for crypto.
It's interesting to think about how they might clash. Oh, and I remember reading about something called crypto-enforced monetary policy synchronization in one of the NBER papers. What is that all about?
Oh yeah, that's a fascinating idea. Imagine two countries where a global cryptocurrency is really popular. What this concept says is that those two countries would basically have to have the same interest rates.
Why is that?
Because if their interest rates are too different, it could cause problems. Like, one country might hit the zero lower bound on interest rates, meaning they can't lower rates any further, or people might just abandon their national currency and switch to the cryptocurrency entirely.
Wow. So a global cryptocurrency could really limit a country's ability to control its own monetary policy.
Exactly. And if that cryptocurrency was also backed by assets that earn interest, it would make things even harder for countries to do their own thing. It kind of ties into the impossible trinity idea, where you can't have a fixed exchange rate, free movement of capital, and an independent monetary policy all at the same time.
It sounds like central banks have a lot to think about when it comes to crypto.
They do. It's this constant back and forth between them and the crypto world.
A bit of a chess match.
Yeah, you could say that. Yeah. Central banks are trying to figure out how to stay relevant and keep control of their currencies, while the crypto world keeps pushing the boundaries of what's possible. And there's research suggesting that some countries might benefit more from launching a CBDC than others.
Oh, really? Like
Right.
who?
Well, the European Central Bank has done some work on this, and they think that currencies that are strong but not the dominant currency in the world, like the euro or the Chinese yuan, might gain more from having a CBDC. On the other hand, the US dollar, because it's so dominant, might actually be hurt more by competition from other CBDCs. And of course, all of this could have a big impact on the cryptocurrency market too. It's all connected.
It's incredible how much there is to consider. Technology, economics, global politics. It's all intertwined.
Absolutely. The future of money is going to be shaped by all of these forces working together.
Well, we've covered a lot of ground today. For everyone listening, what are the key takeaways from all this research?
I think the main thing is that central banks around the world are taking digital currencies very seriously. They're actively exploring CBDCs, and some are even running pilot programs. They're doing this for a few reasons: to make their payment systems better, to make sure they stay in control of their currencies, and to respond to the rise of cryptocurrencies. But it's not a simple thing. Designing and implementing a CBDC is really complicated, and it could have big consequences for the whole financial system. It could affect financial stability, how central banks manage monetary policy, and how we make payments across borders. And of course, the relationship between CBDCs and private digital currencies is going to be a key factor in how all of this unfolds.
It's definitely a lot to keep track of, and things are changing so fast.
Yeah, this deep dive is just a snapshot of where we are right now. Who knows what the landscape will look like in a few years?
That's for sure. So one last thought for everyone listening. As central banks move closer to actually issuing digital currencies, how do you think it will change how you use and manage money? And how do you think all of this will play out with the world of crypto? It's a lot to think about, and we encourage you to keep learning about these topics. Thanks for joining us on the Deep Dive.
Thanks for having me.